Monday, the 19th of December, market analysis, Stan Ehrlich. As usual, I start out with the S&P 500, which is going south. Exactly what I wanted for the last 4 days in a row now. Here's what I think. I think we're going to go down to about 372 to 370. And that'll be in the next, and this is, I'm starting late today. I had internet problems. Very sorry. It's 12 noon California time. There's only 1 hour to the close. We're currently at 378 and 3/4. I think we're going to go down to 372 to 370, maybe a little bit more today. Got an hour. And tomorrow, and maybe even it'll take into Wednesday. But remember, Wednesday is hopefully going to be the beginning of the Santa Claus Rally, which starts just before Christmas. My historical investigation of the Santa Claus phenomena kind of indicates this Wednesday. Also, there is good support at 72 to 372 to 370 from way back in June, July, and in general in September, October. Now, this low, if I'm right, for the Santa Claus Rally, which should carry into the first few days of January. And for those of you who are interested, you can email info@ersignals.com. I'll give you more information about the Santa Claus Rally. That's info@ersignals.com. So we're now officially oversold, but not much, but definitely with my strategies. And, well, I shouldn't actually say that. We are so close, it's ridiculous. It's less than a point on the RSI 1 to 100 scale or 0 to 100 scale. So just a little bit lower in the next hour would push my RSI levels into my custom oversold levels and set itself up for a rally only because it's oversold. But what we really want is the same thing that happened October 13th. A bullish engulfing would be idealistic anytime this week after we get oversold here, and it's almost there. Not quite, a ridiculously small amount. All right, so it could turn oversold while I'm still talking here. The S&P 500 may not necessarily stop coming down. Remember, on a long-term basis, I'm still bearish to 340 or even lower, and I've been that way since the beginning of the year. The market topped out in the first few days of January 4th or 5th, I think. So I've been bearish since February, March, somewhere in there, and been saying so all along, including during the significant rallies we've had, and was able to fairly accurately pick some of these important highs. Boy, this is almost there. I just need a little bit more weakness, a few more ticks, literally, and I will be in oversold condition. And not there. And okay, good. So what about the DIA? Sorry, I get distracted a little bit. DIA. Oh, I didn't finish this S&P. Hey, we've got gaps to close on the S&P. 2 gaps to close above the market. Another reason to go back up to certain prices to close those gaps. One of the gaps is right around 387 and a low number, 387.10.20. Another gap is at 395, which is back up into that trading range that we broke down out of last Tuesday. That was great. That was a test of resistance, an upside exhaustion gap on the opening. The Fed's announcement popped the market up, but it couldn't hold, didn't hold, hasn't held. For that day, closing very badly. The next day, which was Wednesday, and then Thursday, and then Friday, and today, Monday, we are down at the moment another 477, almost 5 points. All right, so DIA. And I'm not going to go any further than the indexes today because things are a little bit messed up. I have to fix them. unfortunately, the internet problems I had. So the DIA, new low and last for the move down. One or two very small gaps to close, like the S&Ps on the same days, of course. And the DIA has been the strongest of the three indexes, the third being the QQQ, but it's still lower than Friday's low, which is a new low for over a month. So they're all doing the same thing. And look at the Qs, which have been the weakest of all of these indexes. They're now in the 260s, 269.07, when the low of the whole market is 254 back on October 13th, the October lows. And there's not that much support underneath the QQQs. But I think the most important index to watch is the spider. So I'm expecting the Qs to get down to approximately 262 on the QQQ. And it'll be the same time to the minute probably when the spider bottoms out. The Qs and the DIA will bottom out. Again, I'm watching very closely at this particular point for a turning back up again for multiple reasons. Oversold conditions, gaps to close above the market, support levels being tested, and the Santa Claus rally. So I guess I'm going to leave you with that information or ideas this morning, Monday the 19th, and I will be back to my futures, forex, and sector indexes commentary and charts tomorrow. Sorry this is so short. Thank you very much, Stan Ehrlich. Have a great trading day and Merry Christmas.